All right, good morning everyone in the room. Today is Tuesday, December 6th, and I'm Michael Boutros. Good to be here with you guys this morning for another intraday strategy webinar. We just got the release of trade balance figures from the United States showing a slightly larger than expected deficit, negative 42.6 billion. We were looking for a print about 42. You also saw a slight downward revision of the previous print from 36.4 billion to a deficit of 36.2. So upward revision here, slightly worse than expected here. Shouldn't be a major market mover here today, guys, but we still do have on tap later in the session at 10 o'clock in New York, factory orders, more importantly, durable goods orders. And watch those goods orders non-defense, a very good gauge of business investment. This is the first read, the final read for the October calendar month. Okay. So good morning to everyone in the room. Again, it's good to be with you guys this morning. Got a lot to cover. We'll go over the dollar crosses, the euro pound, the euro Aussie, and Aussie dollar from last night's update. Obviously, we got the RBA interest rate decision. No change there. Didn't see too much volatility in overnight trade. We'll touch base on dollar CAD, which is at a nice big level as well. Kiwi dollar hasn't been much of a player, but we'll check that out. And I saw a lot of questions on the sterling crosses, guys. I haven't really been trading them myself, but if you have any sterling crosses that you do want to cover, feel free to throw them on the message board. Roseman will definitely get the commodities as well. Let me write that down, silver and gold for you, right? Gotcha. Hey, Adam, great to see you in the room. Good morning, buddy. Trade balance unbalanced with strong dollar, right? Well, yeah, I mean, the deficit has been there. Eileen, I don't think anyone was surprised to see that, but certainly not going in the right direction. I'll tell you that much. Adam said it's always great to be here. Cheers, mate. All right, so let's jump right in. D saying if you could kindly go over euro pound early in the webinar. You know what? Let's do that right after the dollar index. We'll do it first. It was first on last night's update as well, so we'll go over that. I think it's setting up excuse me, I think it's setting up a beautiful weekly opening range. In fact, the whole monthly open is pretty impressive, but for now, the focus is on that near-term resistance we highlighted last night. So we'll go over that in a moment. As always, guys, feel free to throw out questions throughout the session. Feel free to stop me at any point with any questions you might have. And let's get started. DXY looks like this. So I actually did highlight the DXY last night as well. Really just wanted to point you guys out to this major support target that we just are rebounding off of right now, and that was at 100. We talked about this yesterday in the webinar. That is the 2015 high day close. Converges on very nice slope resistance, former resistance, now support, and basically caught the lows that we just made here in the DXY. Now, remember that this is largely very heavily weighted the euro, so we're going to want to watch euro price action pretty well. That being said, I do think you still risk a little bit more of a rebound here in the dollar index. We're looking to sell that rebound. Okay, the broader focus stays bearish. Your first area of resistance, excuse me, as I noted last night, will be right around here, 100 spot 69 or so. 64 is the basic actual swing low. You see a nice pivot in price. Just below that, you have this stretch high, 100 spot 50, which is actually the high from last year. But I'm not really going to stress that. I'm going to be looking for these range lows that we broke. That's the near-term resistance. Broader bearish invalidation, unfortunately, is still all the way up at the monthly open. I know it doesn't help us much from a trading standpoint, which is why you want to be nimble on this from this level. Really, unless we get through the monthly open, that's the only thing that would put me constructive on the dollar. That being said, you're testing near-term support. Now, we added yesterday a 100% extension, just to give you a reminder. That already has broken. Here's what that looked like. It was right over here and gave us a near-term target also at 100 spot 42, spot 51. We soared right through it, or broke right through it, I should say. So we're not going to stress that anymore. The 1618 is the next target down, and that converges on the former 2016 high day close from January, and that's right here. Okay, so I should probably change this, guys, from 2016 to the January high day close so no one gets confused. And that gives you 99.53, 99.55, okay, as the next sort of downside target here for the index. Here's what it looks like on the intraday chart. Again, this is a 2-hour. Here's your weekly open, gapped higher, Monthly open held. The monthly open again comes in at 101.51. Saw that pullback to cover the gap from Friday, and the continuation lower basically puts resistance right back at 100.64 as noted last night. All right, so could see a little bit of a rebound here. Again, keep those slope lines in focus. You know, you're basically holding former slope resistance, now support. Bounce from higher here, we'd still be looking to set a little bit more of a more concerted low if we break back below that 99.73, 99.53 barrier. Questions on the ICE dollar index, DXY. By no means are we saying that this has, put in a major dollar high yet. But from the indications, if you looked at Jamie's piece yesterday with the daily analog, here's what it looked like. Really impressive, okay, as far as what the analog tells us moving forward as far as expectations for dollar price action. So before we get too excited about calling this a concrete high, we do know that the central tendencies take this lower. We do know that we've already made some nice divergence into those highs. We've made a break of the near-term range. We're at near-term support. Okay. Roseman says, sir, are you mute? Is anyone having any issues with the sound? Give me a quick yes if you can hear me. D says no. AB says good. Okay, thanks, guys. It might be just isolated issues. All right, thanks, guys. Appreciate it. See if we can help out Roseman here. Okay, any questions? This, by the way, can be found on last night's swing update, so keep that in mind, guys. The latest swing update from last night on Jamie. And that's the dollar index. Going once, going twice. Watch for that break below 100. You do risk a near-term rebound. Look for resistance near 100.64. Break lower. Looks for 99.53, 99.55. Yearly open comes in at 98.69. This would be sort of your extended target to the downside. Okay, moving right along. Let's go into yesterday's updates. First is up for D, who's looking at the euro pound. Here's what euro pound looked like last night. We've been following this one for some time. I'm going to segue real quick to the 29th here and take a quick look back at time at what we were looking for in euro pound. Here's what it looked like, and we were basically looking at this major key support near term at 84.91, 84.78. That's now the resistance range we're looking for. We broke below it. We took down targets at 84.14, right here into 83.50. This is now near-term resistance. Fast forward to where we are now, and here is the trade. Same two targets got taken out. Former support, now resistance. The focus is on a break of this range. Largely, I'm looking for the top side break. Here's what it looks like right now in euro pound. Okay, so before we move into the intraday chart, I do want to just focus real quick on the daily chart. Here's what it looked like last night, and the levels remain unchanged. Your basic, let me take a step back. The reason this trade is appealing to me, for those of you who've been with me for a while, I like to call this trade the grandpa trade, just because it typically has a tighter ATR, and it tends to be a little bit more rich in blood, right? Because you're working with pound pips here. So as far as an intraday trading strategy, the winner is going to be, they're going to be better, and the loser is going to hurt more, which is typically not how I like to really get involved. But that being said, when the technical clarity is there, it's there. Near-term resistance, 84.91 into 84.88. 78. Why is that important? Well, at this point, it's the monthly opening range high, comes right in that range. It's the 1618 extension from the decline off the highs that we made for the year. Former or basic trendline support, tagged once, tagged twice, tagged thrice. There's the break, now resistance. And add to that, this longer term formation that we've been following off the lows, the median line, which has been a really nice pivot in price, also comes in right in there. Now, as support is concerned, well, you have a basic 38.2 retracement. This is from the advance off the lows of the year. So this singular retracement takes into account all of 2016 trade. You have the 50 line for the operative slope. That comes in right there as well. You have the 100-day moving average, which slides in just a little lower. Okay, that's all the way down to 82, 83, just beyond the lows that we made yesterday. And then you have the lower median line parallel of basic slope support. And this is basically just this same slope. Take that same slope, parallel, another parallel off that peak, caught a nice pivot in price, another parallel off this low, literally almost caught the exact low. So the focus and the monthly opening range consists of this key range here, basically between 82.90 and 84.90. Got a 200 pip range that we look to clear. We're favoring a topside pop just for a recovery. Why? There's a couple of different things I'm looking at. A, you do have some divergence all along the lows. So the entire time you're making a lower low, lower low, lower low. Here's price action. Again, a series of lower lows. So respective price action and what we're looking at with euro dollar and pound dollar. I do think euro dollar in the immediate term can pull back, guys. And if you look at the swing trade from last night, obviously we're looking for possible entries near 106.60 if we get that pullback. But certainly an immediate risk is for a pullback in euro, but we're largely looking to buy that, right? Pound, I think, is a little bit of a different scenario. It's really drifting towards those highs, and checking structural resistance can have a little bit more of a meaningful pullback. That would put a nice little upward pop here in euro pound. So that's sort of the focus moving forward. D, I don't know if you have any specific trades that you're already on that you need help with or want advice on, but I would be watching that key daily chart, watch 84.90, watch 83.90 as key support. Here's what it looks like on the intraday chart. Here's what the 4-hour look like. Real clean as far as these median lines. Again, you could see basic slope resistance, really nice extensions and parallels off each one, making some nice pivots in price. Puts the focus on this range. Here's what it looks like now. Okay. D says, short, I need to get out if your bias today, if your bias is up. So hold on one sec, D. Is this the trade that you were talking about in yesterday's webinar? You're holding it from above 85? Correct. Okay. Yeah, you had a beautiful entry on this. So this is what I would say. Again, I'm not sure if you shaved any off last night or yesterday, but basically the immediate focus, like I said, you could still probably get a run back into the weekly open, or basically sort of that gap. You're looking at essentially 84 handle, but this is a near-term support right here. This is the key support. Now, I don't know, D, if you get down there again into 83.50. If this is a basic break of support, check of resistance, then we should not get past this high. This high should be preserved. Okay? All I'm saying is that you've made a very impressive weekly opening range right below resistance. I do think, again, on account of what we were looking at in the longer term charts, that you could get a little bit of a stern correction to the upside, and specifically with what we're looking at with our relationship, with our bias on the euro, it could be a nice pop higher here on a relief, as it were. But I would say if it gets, or let me take that back, 83.50 is still the level to beat. It's still the level to beat. I know we kind of soared through it at the open of the week, but now you have, again, if you take a longer slope here, that 50 line, which has been a nice pivot in price, right? That comes in there, the lower parallel, the 38.2, still could get a little bit of a pop. So I wouldn't jump out just yet. Look to see how the U.S. Opening range looks. If you get a rebound off of 84, or you get some divergence on the near-term charts heading into 84, it might be an opportunity for you to kind of take a little bit off the table there, D. And 84.90, that's finito. I mean, if you get above that, I do not want to be short. You're likely to get a much more significant recovery towards that upper parallel. Really nice support, resistance. That could take you as high as 86. Stop's already in place at 85.10. Think I will get out 84 handle if I can still make that money. Right on, D. Good trade. I like where you're at. Always better to be in a position where you're trying to manage out of a winner, right? So well done on that. Yeah, we're still sub 50 in near-term momentum. Let me just take some other, sort of gauges for you since you're already in that position. Yeah, wouldn't get too concerned yet. Wouldn't get too concerned yet. Here's sort of just a near-term trigger I'd be watching. It's 3 points right there. You do like the fact that he came into 50 here on the 5-minute chart and really failed to break above 50 on the momentum. You also do like that the initial sort of pre-market opening range just broke to the downside. So I would think it could get a little bit sliver lower. Long story short, if it holds above the weekly open, like I said, 84, I'd be watching for a rebound there. Make sense, D? Any questions on Euro Pound? D says, yes, thanks. You're more than welcome. Good luck on that. And again, keeping in mind you're working with pound pips here, guys. So if you're looking for new entries on this, just make sure you're using your leverage accordingly. And again, I do think you could see a little bit more of a rally if you surpass that 84.91 level. So watch for the break of this range heading into ECB, which is on Thursday, guys, by the way, ECB. All right, so that is dollar. That was number 1. Euro pound, that was number 2. Let's hit up Euro Aussie, number 3. That was next up on yesterday's update. Here's what Euro Aus looks like. So again, as far as the near-term levels for this are concerned, there's no change. Okay, we're right on track. We just came off resistance yesterday, as we had highlighted here. Downside move. Look for some near-term support. You want to stay constructive above 83.50. Next up on tap, Euro Aus. Here's what this looks like. Another really impressive one. And in fact, with regards to what we've been looking for as far as the outlook for the Aussie dollar, which came into resistance, I thought this was another one that kind of just made sense. Euro Aussie, here's what it looks like on the daily. We broke a pretty major support line earlier in the year, October. We came back and checked it as resistance right here. I'm sorry, right here. We came back, we checked it as resistance, we moved off, but those lows have continued to be respected. In fact, we haven't even made a lower low since that October low that we made. And if this structure is in play, it's given us some pretty good slope. If it is in play, then this breakout should really give us a topside focus. So we should be looking for that rally towards 145.73. So on account of that, yeah, I'm kind of looking for a topside pop higher in Euro Aus. Here's what it looked like last night on the intraday charts. 4-hour chart had us with some nice slope. Didn't really want to stress this slope too much because it's been kind of messy, right? Kind of forcing it. But it highlighted the peaks that we were making and just ahead of that target that we cited last week at 144.78. We've now hit that, kind of soared through it a little bit, but we're still trading around these levels. Let me just show you where the live chart is. Euro Aus. Here it is. All right. Take a step back. Here's the 4-hour. And here's what we looked like yesterday. Okay, so we came up, we tagged that 144.78 level, came off again. You're seeing a reversal here. Former support or former resistance, now support. 2015 lows comes in at 143.50. That's right here. Okay, that's your first initial support here on Euro Aus. If this is a break of the formation, we should be, this thing should find support into the monthly open / 2015 low. It gives you a range of 43.32 into 43.48. 43.33 into 43.48. Okay, so the levels are unchanged. That should be your near-term support. Broader sort of bullish invalidation would be down at 43. That's the weekly open. That's your 2016 low day close, still preserved at 143.03. And for me, a break below this would sort of invalidate this whole sort of break scenario. You'd be looking for a continuation lower. Keep in mind what we did. Okay, I just want to really highlight this daily chart. Very clean consolidation. Support, 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 break, resistance. That target, if we're going to check it again, is up here at 45.73. 100-day moving average, former slope support, now resistance, key 618 retracement. Huge level. Okay, huge level. So above 143, got to respect the upside. Key critical topside resistance in an area of which I'd be looking for short exposure again would be up at 145.73. Any questions on Euro Aussie? You might have also noticed, guys, I kind of put this chart in there just to give you a really good picture of what this same chart looks like in a close formation, or basically with a line chart, which is only highlighting the daily closes. If you look at this, we've been eyeing this trade for some time. If you go through the intraday charts, on the basis that, yeah, the daily chart's been marking some pretty strong divergence into those lows. But as we always say, divergence doesn't give you any indication on time. So it can show divergence and the rally could not materialize for another week, another day, another month before it actually starts to move up. But the signal was there. And certainly you made a lower close in price on a monthly basis between October and November. You made a series of higher lows in the RSI signature on that same stretch. If this break is legit, I'd be looking higher well above 143. Any questions on Euro Aus? And you can find that chart by just clicking on that bullish divergence in the Euro Aus update from last night. Michael Schneider, how are you? Says, where would you buy longs? So for the Euro Aus, the first area of support I'd be looking for is right here at 143.34 into 143. Same levels from yesterday. So this is your first interim support target. This is where I'd start to look for some support, some long triggers. Your bullish invalidation is 43. So that's only a 30 pip move in between there, of which you have some risk. So if you get a decent trigger, that would be sort of an area I'd be looking for. But if we break 43, that invalidates my near-term bias. All right, so starting into 143.30 is where I'd start to look for some support here on Euro Aus. A gun to my head, a gun point to my head, Mike, this is what I would think that you would make sort of a rebound here, then a stretch lower, and then a rebound finally to make that stretch towards 45.70. Again, I don't like to give that kind of conjecture where I'm kind of just giving you what I guess is going to happen, but from what price action is saying here on the near term and the construction of the rally, that's sort of what I'm thinking. Note that you had some really strong divergence into these highs, right? Last week's high, this week's high, higher high in price on a close basis, a lower low, a lower high, excuse me, in the oscillator. So yeah, I think the risk is for a pullback. So even if this rallies a little bit, you probably see another low pointed out in U.S. trade. But I do want to stay constructive above this key region. Make sense, Mike? He says, yes, absolutely, exclamation point, right on. Always great seeing the room. Okay, that is Euro Aus, number 3. Any questions on Euro Aus before we move off? All right, now in the meaty stuff here, some of the dollar crosses that we've been following. Here's Aussie dollar. Kind of kicking myself because I got scared out of that short. I told you guys yesterday in the webinar I was looking for a rally into 74.99. We've been following this one on a daily basis, I guess for 4 or 5 days now on the intraday charts. Really clean. Again, continues to be my favorite Aussie pair. The issue I'm starting to get is that we're not seeing much follow through on the shorts. So let me take a step back. Here's what it looks like. I'm flat, by the way, as of now. I do want to be short, but as of now, I'm still I kind of bailed out of that short earlier, a little too early. Here's what we were looking at, right? Big resistance level here at 74.90 and 74.98. We've been watching it for a while. A 100% extension from the advance off of last month's low, a 38.2 off of last month's high. You got the median line off the high, a whole host of goodies here. Nice pivots in price going all the way back to the lows that you made in April of this year. So you had a really nice opportunity to get short off this into the close of last month. That was a nice play. We were involved in that. We walked it through on the webinars. Another rally here, gave me another opportunity to get in short off that same critical region, just below 75. Now heading into the RBA, you know, got a little shook. Things could happen, yada, yada, yada. We're not really expecting them to cut, but you did see some further downside move, which quickly retraced. So we're trading lower on the day, but not by much. So keep in mind this. If we pop 75, there's really nothing to stop this thing from rallying right into 76. And I'm not just using whole numbers. There's technical significance there. You have the 1618 extension of the advance. That's the least of which comes at 75.80. You have the 100-day moving average just ahead of that. Again, the least of which. More importantly, 75.99 is the key 618. Former slope support. Now resistance. Last month's open. All converge right here. This is not what I want to happen. This is the contingency plan. As long as we stay below 75, I have to respect the short side of the trade. I'm saying this because I do think that if the dollar corrects lower, and let me just take a step back, if the index, if Dixie breaks lower from here, that could prompt a little bit more upside action Aussie dollar to give us a tag of that resistance before we move off again. So I'm playing it super nimble, maybe a little bit too close to the chest, which can also work against you guys, right? If you're playing it too defensive and you're really not willing to put that unease can sometimes rob you some of the meat of the trade. I'd rather be a little bit more, you know, on a defensive stance than offensive stance, but that's sort of where my thoughts are right now on this broader picture for the Aussie. Looking at this from the intraday, and by the way, momentum still, you know, holding 50 resistance. Nothing here is to scare us out really from the broader picture just yet. And the fact that this came up in two equal legs, guys, two equal waves, screams correction, which gives us a broader downside bias. So everything looks the same, but on account of some of the dollar price action we're seeing, you want to be mindful of a break above 75. That said, here's what it looks like on the intraday. Really clean, okay? We were working with this channel for a little over 2 weeks. Break of channel support, we're simply checking it as resistance. It happens to be that same key range, 74.89, 74.99. And again, want to stay bearish below this. On a breach, you're risking a rally right into that 76 handle. Okay, this region right here. 618, I'm not going to go over all the levels again, former slope support, yada, yada. All up there. All right, so what does that mean, Mike? Well, I kind of wish I was still holding that short. I'd be looking for, again, some exhaustion on any type of rallies, sub 75. If you break the weekly opening range lows, which comes in right around the 74 level or just above, I'd be looking for 73.80 as a first soft target. That's the 618 from the advance off the lows here. So it could be a soft target again, but really looking for 73.30. The yearly open converges on a 786. That's 72.82, 72.80. Critical support, longer term support, is all the way down at 72, 12, 72, 22, this region here. Longer dated 618, the lower parallel on the daily chart, that corresponds with this region here. All right, so despite the little bit of a hesitancy on my end right now from this exact level, you're kind of sitting mid-range for the week here. You're not near the highs, you're not near the lows. So I kind of want to see this resolve higher so I can get back. You know, that being said, the levels, technical clarity, structural resistance support, absolutely fantastic. I still like the Aussie, if you can't tell by the updates. Still my favorite trade so far. Questions on Aussie dollar? Here's what it looks like on the hourly. I'll be looking for short trigger sub 75. Okay, number 5, let's jump into dollar CAD. So any questions for any of the levels highlighted on last night's report, do feel free to throw those on the message board. I do want to take a delve into the previous update from Sunday with some of the dollar CAD levels that we've been following as well. as Kiwi dollar. So here's what dollar CAD looked like on the daily to open up the week. We cited a downside bias while below 33.81. Basically, you're looking for this to find resistance at former support, a 38.2 retracement. You also had the median line, which ran right through there. And you're still looking for a break of that major critical support barrier into 32.31, 32.50. Well, here's dollar CAD now. Here's the scalp look like. I guess we should just do it on the same time frame, 4 hour. Here's the 4 hour look like early in the week. Okay, so we started off the week citing a downside bias sub 33.75. The high was just shy of that. It was 33, what was it? 33.57. Okay, we came in just shy of that resistance, broke down, again testing critical support to 32.30, 32.55. This is still the level to beat. I really can't stress how important that level is. Until we get below that, you have to respect a little bit of a rebound here, which coincides with what we're seeing in the ICE, Dixie, the DXY dollar index, right? We just talked about that earlier in the session, possibly coming off support. Aussie dollar, same kind of deal, right? You still could see some dollar strength on the rebound there. But long story short, you know, I still like this lower. I still like this lower sub 33.80. I still want to see a break sub 32.30 to get this going. You'd be targeting the 100-day moving average, somewhere around 31.88. Then major critical support from a structural standpoint is all the way down here, 200-day moving average. Basic slope support, if I zoom out, this goes all the way back to the lows that we made in 2014, specifically July, the lows for the year, okay, and the lower median line parallel for that pitchfork off the lows, all converge down here. It's a long way from where we are right now. Keep in mind we're looking at a broader picture of the daily chart, but near term, got to respect support. Let me adjust that real quick. So from here, look for initial resistance near 33.13. I'd be looking for possible re-entries on a stretch into that 50 line. I know we didn't get much play on it, guys, but as Jamie highlighted yesterday, I'm not sure if it was yesterday or a couple of days ago, we were talking about this. I'm pretty sure he put it in one of those reports for you. We were talking about the fact like, all right, well, you can see that the 50 line didn't really offer much on the way down here. And, you know, we don't want to arbitrarily necessarily be like targeting these levels, guys, if they haven't seen reaction and price previously. That's the whole study that we do. But on a formation like this, the fact that the lower 50 line caught the lows here exactly puts the focus on resistance there as well. So even though previously you might not have gotten much play off it, the lower parallel did catch it. Look what happened in an overnight trade. Not only was that low again into that key support barrier, but turned again just ahead of that 50 line. Keeps the focus still lower while below the 50 line, the upside, and that's around 33.40. So I'm still looking lower. You know, you could see a little bit more of sideways consolidation here. This is the level to break. Again, 32, 31.88, as we noted on the daily chart. 31.40 is a nice pivot in price, and then that structural support down to the lower parallel. So looking for a rally sell here in dollar CAD. In fact, take this into a 1 hour chart. Real near term. Let me just see what this looks like. We already made 100, huh? Yeah. All right, I'll leave that 1618 there for now. But possible levels of exhaustion here near term on a rally higher in dollar CAD. Now, if you do take short exposure off one of these stretches, guys, once you get it back into 32.50, 32.30, you have to be shaving some of that trade off, bring your stops to break even. You know, I would not want to be sitting short down here without at least having my stops in the money. Because who knows, this could charge a bigger rebound. I don't know. All I know is that's the level that we need to get. to get the further downside progression here in dollar CAD. Questions on Loonie? Keep in mind that we do have the Bank of Canada interest rate decision tomorrow. Okay, you get IV Purchasing Managers Index. That comes out the same time as some of that U.S. data at 10 o'clock after the close of this webinar, so keep your eye on that. Expecting to see some strength there, which could fuel, again, some CAD strength. But the Bank of Canada rate decision, guys, on tap tomorrow morning at 8:15, right ahead of our webinar. So by the time we open things up here, we should have a little bit more clarity on that. No expected change to interest rates. All right, that is the Loonie. Next up, I just want to touch base real quick on Kiwi. I haven't been too big of a fan as of late. So here's what Kiwi kind of looked like earlier in the week. Here's the Sunday open look like. We talked about, possible stretch into that 71.86, but I really wasn't looking for this thing to give us much more upside beyond that. And it failed ahead of our bearish invalidation level, so technically I still want to be looking lower, but, I just haven't gotten the kahunas to do it yet. Here's what I'm looking at now. And again, we kind of touched base on this yesterday real quick in the webinars on daily effects, but basic slope support or basic trendline support breaks should stay below this if it is just a zoom retest and continuation. Last month's open, which doesn't have as much significance now because obviously it's a new month, it does line up here though as well. And some nice pivots and price action previous. So yeah, I still, technically the levels haven't changed. Here's what the intraday chart looks like. Bring this to a 2-hour. Here, put them side by side. Technically nothing's changed, okay? And even if you go back to the previous update, as I said, if this rally into resistance was a zoom and retest of the broader channel support, broken last month, Kiwi should hold below the weekly highs on any rally. Well, we've now made 3 separate attempts. I guess you could say 4. Here's the first one, which failed. Here's the second one. Here's the third one, right? And they've all continued to fail below last week's high. And as long as we do that, I still do like the short side. And I kind of feel like I'm trying to force this trade, but that's what the technicals are saying. I can't get excited about this until we at least clear the weekly opening range, which would need a move sub 70.70 to get this going. I'd be targeting 70.35 and critical support down here, Brexit low, 100% extension, 69.55, 69.70. So I really don't have anything new to comment on this. The levels are unchanged. You want to stay bearish below last week's high. Look for a break of that monthly open, weekly opening range low right here to really validate this thing, get it going. The only thing I like about Kiwi is on the broader picture, this thing is just basically set up the monthly opening range right between the 200-day moving average that you see there in green and former slope support, now resistance. So that gives you a range of 71.55 basically into 70.50. Another 100 pip range that we'll want to look for a break early in the month. Questions on Kiwi? You're pretty light on data. Got card spending on the 8th. That's later in the week, and house sales as well, but limited as far as Kiwi event risk into the weekend. Okay, so if there are no questions on Kiwi, those are pretty much the pairs I'm focused on, and I've been really kind of in and out of since the start of the week. I want to leave some room for your questions, guys. I do want to go over silver and gold. That was for Roseman. Here's what the commodity block looks like. Oh, and we'll go over crude as well, obviously, yeah, for sure. We were talking about that before the webinar started, right? Okay. Dun, dun, dun. Let's start with gold. So as I said, and as I've been saying, I'm not really a big fan of gold from these levels. I think that there are some opportunities. Well, this is silver. There's gold. But near-term price action has been very lackluster. I think you could see a more prominent rebound here, just on account of what's going on in momentum. Both on the daily chart, you can see that we're seeing momentum start to wane. A weak signal, by all means, a very weak signal below 30, but it's starting to happen. Long wicks into a key long-dated multi-year 618 tends to happen. Even on the near term, here's the 120-minute looks like. Again, price action lower low, lower low, lower low, higher low, higher low. So again, you're seeing sort of the onset of a possible divergence in near-term momentum, telling you that the downside may be getting a little bit weary here. That said, you know, you want to stay bearish sub 1203, 1199, that same key region. Former key support that we were looking at, now resistance. I'm going to go ahead and bring down our bearish invalidation level to here. I still think gold can make a run down into critical support, major support, which is all the way down here at 1120 to 1130. Now, from a timing standpoint, that's really what the tricky part is on this trade, but just from the account of the slope that we've been in on the sort of structure of the decline, which has been very orderly, I want to say, does keep the focus lower below 1203 and really highlights that key support zone, which starts at 1130 but does extend as low as 1120. Okay, so this is a daily chart. On an intraday target, I am long, level for targets, please. So Roseman, as far as, was that about crude, that comment there, or was that about gold? Oh, gold. Okay. Well, here's what the intraday chart. That's a good thing I was about to say. Here's the intraday chart looks like. So on its, actually, let's zoom out. Let me just do some on the fly here real quick. Bear with me one moment, okay, Roseman? See if I can't get you some levels here. That's nice. Support, break resistance. It is messy, but highlights the weekly open as near-term resistance. Okay, that converges on basic trendline resistance extending off the highs they made on the 17th of last month. And like I said, that divergence does look pretty decent. You don't have much of a topside trigger, but you could work with something like this. Let me see what it looks like on the 1 hour. Yeah, it could work with something like this. You got 3 points there. It's actually a pretty decent trigger to the upside. Okay, so a topside break here and a topside break here would really validate the run. Now, your stop would basically need to be against those last couple of session lows at 1179 on a rebound here. But counter trend, right? Counter trend. So I would, again, a breakout trade, sure. I'd be very nimble on this type of rebound because you're trying to essentially call a low on this thing. But the risk remains lower, sub while below channel resistance. Weekly open, just below 1180. All right, Roseman. And then the targets are unchanged. 1203 still the level, you know, bearish invalidation. So if you're long on a rebound here, that's sort of where I'd max out any type of targets as far as the long side's concerned. Make sense? 1160 stop. Yeah, I guess you're basically looking right against last week's low. Sure, that makes sense. But again, I just want to make sure that you're getting onto that trade under the proper premise, Roseman. Um, so you're basically looking at a $9 stop, but resistance is just higher. So just keep that in mind. Make sure that we're working with a proper risk reward. I'm not sure where your long was initiated, but definitely this is the resistance that you need to respect heading into the open of U.S. trade. If that pops, I think you're on for a nice rally back towards 1203. All right. Um, so that is gold. Silver's a little bit more. We will. Yes, we will. Euro US dollar. Silver is a little bit different in that it's a little bit more tidy in my personal opinion. The level that we just came off of, 1685, excuse me, the highs from the swing that we made back here on the 28th of July. Also, the former highs that we made back on the 22nd as well, for that matter. And former slope support. Support, break, resistance, resistance. So I think, again, like the gold trade, it's similar type of move. You're seeing a rebound into near-term resistance. Could see that downside push give you a little bit more. But on the near term, you're still more on a constructive approach. So very similar picture here in sort of this rounded bottom type of formation. Remember last week we added this pitchfork while noting, we don't really know if we have too much emphasis or too much conviction to put on this formation just yet. But it's continued to be rather fruitful, actually. So you can see that the median line, while it hasn't been the bigger player, here's the 50, or this is the 618, if I'm not mistaken, even better. 618 of that range, catching the highs exactly on that rally. 618 catching nice support, pivot, pivot, pivot. That gives us support again. Confluence support right here. Okay, former median line coming off the highs. Also converged here, so the same type of slope confluence of both those formations. Same type of deal here. The 618 of the advance and former resistance. 1565, 1550. Still support here for silver prices. All right. I do have some questions come in here, guys, and I want to get them all through. So I'm going to start to go a little bit faster pace here. Stop me if you have any questions. Crude. Here's what crude looks like real quick. On oil, yeah, dollar yen has already been dropped on the menu, so I got you. Here's what crude looks like. I was actually talking with Roseman earlier in the session, and she was saying you were right on crude. It's moving down from yesterday. It's not about being right or wrong, right, guys? It's about finding opportunities and really being able to maximize, um, being able to respect the technicals and play the levels that you see coming. So we talked about the daily chart yesterday. I just want to highlight this. I don't know if you're in the room here at Conwell. I know you've been following this trade like a hawk, but 5160, 51, what was that again? 46. We talked about this at length. Big range of resistance. 2016 high day close from previous, until we broke it yesterday, it was right here. We made that on the 19th of October. And then you had the also 1618 extension from the advance off the lows. Okay, this, boom, boom, boom. And you had the June highs all stacked up. And as we always want to stress, and this is the biggest fake out and one of the major things that, what always will tend to be something that we want to stress are the daily closes. Intraday, this thing got as high as 52.39. Target on the upside, if you remember in the webinar, was 52.50. And I thought it was going to get a stretch into that. But guess what? Not only did we not close above that key range of resistance, we closed markedly lower. Markedly lower. So that's a prime example of a false break scenario in intraday trade. But if you bring it into a close, a line chart, a perfect hold of resistance. You see that? Perfect hold of resistance. Perfect hold of resistance. So that's where the premise was yesterday of not getting too constructive, not getting too bullish, because, yeah, we're going through those targets, but at the end of the day, you needed to see at least a Monday close, right? We're just opening the week. We couldn't even close above that. Here's the subsequent pullback. Now, you don't want to get too aggressive yet on the reversal, but certainly near term, I am looking lower. Here's what it looks like on the intraday chart. Looks like to me this is just a break of the initial weekly opening range. Don't want to get too excited just yet, but take it into a 4-hour. If you remember this slope we were working with, I do want to see it close below Friday's low, converges on former slope resistance. I know where this is null and void. We're not really going to stress this slope, but it would be a nice precursor to a move down towards 48.90, 48.80. The monthly open is down there. Got some fib confluence regions there. And just irrespective in price, resistance, resistance, support, break, resistance, converges on that same mark. Okay, so the initial sort of look here does suggest that you could see some more kickback in crude prices before you move higher. All right, so that's a quick look at the com block. 6, 7, 8, 9. Let's go over dollar yen. Euro dollar first. That'll be number 10, and then we'll hit up dollar yen and sterling yen here for Steve as well. Thanks a lot, sir, says Roman. My pleasure, Roseman. Always great seeing the room. First ups first, euro dollar. Here's what it looks like. You all know the swing trades are looking for entries near 106.60. Love the trade. Talked with it about Jamie for quite some time yesterday. Whole lot of stuff there. You got the monthly open, or the weekly open, excuse me. You got the 100% extension that we've been looking at for some time. You got slope. You got the works. So not really trading this more on a near-term prospect. I'm actually trying to get on that swing trade as well. Near-term, I don't want to slope these lines anymore. I don't want to stress, rather, these lines anymore. So let me get rid of this real quick. There's that near-term support confluence. More importantly, the daily chart's all you need to know here on euro. You see that? You see where we're turning from here, guys? You can't make this stuff up. Just when you think there's no rhyme or structure to the market, you take a step back and you look at something like this, it really gives you a pause, right? We did dribble below the lower median line parallel, but it's been pretty event risk packed month with the election and whatnot and all this. So we essentially held the December lows of last year. We tested it last month. Yesterday, okay, obviously on that big stretch and the Italian referendum, we came right back into it, faked out everyone, broke through the monthly open, broke through the monthly highs, broke through last month's swing highs rather, right into former structural resistance, now support, or former support, excuse me, now resistance. So yeah, could get a little bit of a kickback here, but broadly speaking, you know, the reaction that you saw here at the lows is pretty indicative and pretty telling. Pretty telling. Here's what it looks like on the intraday. D, what's your question there at 107.50? What does that mean? On the upside? That's where we found resistance, essentially, just higher, right at that slope. Look at that. 1, 2, 3, break, instant resistance, right? Stops at 107.50 to the upside. So you're short. What's your target? Because I'm not really a big fan of trying to get aggressive on the short side of the euro. 106.80. You could see a 106.80, sure. Oh, okay. I thought you were looking for a longer term swing here. Let me drill down a little bit for you. You know, I'm looking for an entry at 106.60, so actually I hope it does get down there. I'm with you on that. 50 and a 38.2. Oh, nice. So 50% retracement takes you to 106.50. That would give us the entry we needed for the swing trades. Don't want to stress this 38.2. And you're looking for 106.80. Yeah, that makes sense. Or thereabouts. Yeah, that makes sense, D. I do hope we get a move lower. I do hope we get that move lower. Again, it's very premature, but I just like to take a look at real near-term price action. A 1618 is 106.89. Ooh, that comes out perfectly with the highs there of last week. Might be a decent level to watch. Okay, getting too granular here. But yeah, levels to consider as far as support's concerned. 106.60 still the favored move. You think yesterday was a violent move up? Says D. I do too. It might not get there at 106.60. Yeah, I agree with you. Again, the swing trades are always going to try to maximize your gain, your risk to reward ratio, right? So we're always going to try to get you the best entry guys. By no means are you locked into those levels, so just keep that in mind. Um, on a side note, we are working on some really interesting projects for SB that will be rolling out hopefully by first quarter or second quarter of 2016, where we're able to give you a little bit more of a literal system that you can turn on that's going to give you, if our scalp bias is up, it's going to give you all the buy signals based on some proprietary indicators that we've been coding over the years. Anyway, yeah, 2017, that's what I mean, D. But I'll get you more information on that as it comes. But as far as Euro is concerned, it was a violent move, but also I think you need to keep in mind that there's been so much crowded trade on it that, the washouts on these can be pretty lasting. Here's the last time we saw a washout of this magnitude. That's obviously the election rally, but on the dollar rally, which took Euro lower. But these large wick reversals off of major areas of support or resistance can really see a little bit more of a follow through. So, yeah, I'm not sure we get quite down there either, but I'll be stalking entries as soon as we get near that 107 handle if we do get that low. All right, so that is Euro. That is number 10. Dollar Yen, number 11. Let's touch that real quick. Here's what Dollar Yen looks like. First on the daily chart. I don't really know even what to say on this, guys. We've been looking at this same chart for weeks, and nothing's changed as far as the levels are concerned. The long side remains at risk below that high that we made back on the first of the month. Okay, we talked about that once it happened. Let me take a step back. We were talking about this when we were talking about that mad as hell trade, right? And the gap lower right after the holiday. So that only lasted for a day. We went into a new high and opened this month at a new high. I think the long side is at risk heading to 115.51, 116. That's what we were talking about. No change here at all. I still think you can stretch into that before it turns around. More stronger support, more significant support is all the way down at 111.45. Momentum remains in overbought territory, so I don't want to. I'd be looking for a rally to sell. That's what I want to say. I don't want to get short from here. If we break the weekly opening range low, i.e. former structural resistance, yeah, that might be an opportunity to try to sell a rally towards that. But from this standpoint, if you're asking me right now and you got a gun to my head and said, Mike, what should I do? I'd be looking for a rally into this region to try to fade a move. It's huge. It's a really big region. Not only is it the 1618, again, it's some major key swing lows in price. This is a daily chart, guys. And slope resistance, which has already seen support, break, support. And like I said, the 618 retracement of the entire decline off the highs they made in June of 2015. So I can't get excited about dollar yen. It's annoying me, It's pretty tight range. I mean, what do you really do with that? You wait for more technical clarity, in my opinion. Here's the weekly opening range. You're sitting right slap in the middle of it. Look for a break. Okay, look for a break. Top side pop, I'd be looking for 115, 116, 115.50, 116 as an area of initial resistance. All right. That is dollar yen. Did I miss anything? We went over euro, pound yen for Steve, and euro yen. I got to run through that real quick. Pete, I got that for you, right? You're more than welcome, Pete. So really quick, pound yen, just because I know we did touch base on that yesterday. Here's what it looks like on the daily chart. I really don't have anything on the intraday to talk about with this. I know there's been a lot of interest in it just because it's continued to be such a strong performer, but you know, I'd want to do some more chart work and analysis on this before I give you an outlook, to be quite frank with you guys, Steve. I do think you probably reached that channel resistance or median line parallel that we were targeting. Might take a little bit longer than expected. The breakaway gap that we filled, that still takes you into like 151, excuse me. But I don't have any plays on this. I mean, again, I'm constructive above 138, but that's not going to help you at all right now. We're trading at 145.40. So Pete, or excuse me, Steve, let me take a look at this tonight. I'll come back to you tomorrow with a little bit more of a, hopefully a stronger opinion on what's going on here with the intraday. Okay, so that's pound yen. What was the other one? Euro yen. Same deal in euro yen. The yen crosses haven't really been in focus. Okay, so I'll take a look on both of these for you for tomorrow's update. Okay, aside from those two yen crosses, I think I got everybody. Give me a shout if I didn't. Stalking EuroCAD, Michael Schneider, I forgot this one. Long EuroCAD on a break of 143 or 4, your 5. Your view, please, EuroCAD. I like the concept of the trade. Again, I want to take a closer look, but I love the concept of the trade, and I love how price action has responded. Mostly because this dribble below the key support structure that we were talking about all into the close of last month was very short-lived. You saw a massive outside day reversal off of the lows on exhaustion divergence. So yes, if anything, I think this has a lot of hallmark signatures of a possible reversal higher near term. And again, I'll try to work out some levels for you on this, but sort of a basic outlook. I want to see if there's any confluence there with slope. Look for a pullback. Look for this thing to hold above 141.65. You want to see a stretch into Friday's high. Really, that slope line near term is what you want to clear to get the reversal. But I am looking higher in EuroCAD. We'll come back to this one tomorrow. All right, guys, we'll wrap it up here. Sorry I had to rush into the close here, but we will hit some of these trades again tomorrow, same time, same place. Also, keep in mind tomorrow, midweek strategy webinar with Jamie at 12 p.m. Eastern here in New York. Don't miss that. And keep in mind, still have a lot of event risk on tap, BOC and the ECB over the next couple of days. We'll cover those trades heading into tomorrow's session. Best of luck trading, guys, and I'll see you then. Cheers.